Mastering Cash Flow Statements, 20 Must-Know Tips for Financial Success. A cash flow statement is an important financial statement that tracks the flow of cash in and out of a company over a specific period. Mastering cash flow statements is essential for the financial success of any business. In this video, we'll share with you 20 must-know tips for creating accurate and comprehensive cash flow statements. 1. Separate operating, investing, and financing activities. You need to categorize your activities into these three categories. It's important to know how much cash was generated from each category, as each activity will have its own impact on business performance. 2. Build a cash flow timeline. Build a clear time frame to follow each period. This will help you check for coherence and completeness. 3. Monitor your opening and closing balances. Make sure that your opening balance in each period is the same as the closing balance from the previous period. This will ensure you aren't missing any transactions. 4. Keep a clear track of your revenue. This is crucial to determine the effect of product sales and services on revenue. 5. Deduct your costs. Don't forget to deduct your costs such as materials, salaries, utility fees, and taxes from your revenue. 6. Understand investing activities. Investments can either be long-term or short-term. You need to track the cash flow for these investments over time. 7. Understand financing activities. These activities are related to changes in debt and equity financing. Keep track of the changes and categorize them individually. 8. Use the Direct Method. The Direct Method reports cash inflows and outflows on a gross basis. This method can be more time-consuming, but it will give you a more accurate picture. 9. Use the Indirect Method. This method uses net income as the starting point and adjusts for non-cash transactions. This is a simpler method, although it can be less comprehensive. 10. Review your depreciation. Track the depreciation value of all your assets. Depreciation can impact your cash flow in a significant way. 11. Monitor the accounts receivable. Keep track of the accounts receivables to make sure that the cash is coming in as planned. 12. Keep an eye on the accounts payable. This is the other side of the coin, and it's essential to monitor how much and when you will have to pay your vendors. 13. Keep records of your inventory. Your inventory is your bread and butter, therefore, it's important that you track it periodically. 14. Predict your future expenses. Forecasting your expenses can help you during a cash crunch. 15. Plan your investments. Be mindful of the investments you make as they can significantly affect your cash flow. 16. Monitor your liabilities. Record all short-term and long-term liabilities to balance your cash flow. 17. Review your capital stock changes. This will help you determine the changes made to your capital stock over the course of the review period. 18. Review the dividends and interest paid. Make sure to keep a clear track of all the dividends and interest paid out, which could differ based on the type of entity. 19. Be consistent. Keep a consistent format for each statement so it's easier for shareholders to read and comprehend. 20. Use a cash flow tool. Using a cash flow tool will simplify the process and reduce the margin of error. That was 20 must-know tips for mastering cash flow statements. Take the time to apply these tips, and your company will benefit from accurate and comprehensive cash flow statements. Want to learn more? Visit our channel ZZZ.